Good morning, afternoon, or evening, ladies and gentlemen. All in crypto here, and welcome back, guys, for another daily cryptocurrency market update. Every single day at 1 p.m. UK time, we try and bring you an update just like this one to help you guys stay up to date with the latest and greatest things happening within the crypto space and also the markets. And that's exactly what we're going to be doing in this one. We have a rather interesting update lined up for you. We're going to be looking to start things off at an article that was published by Forbes talking about $487 trillion worth of value that is likely to be coming on to the blockchain and essentially ran through DLTs. You know, this is ultimately the future that we are moving towards. Distributed ledger technology is revolutionizing finance, along with many other things. And ultimately, this is something that we are trying to capitalize off. Some of the blockchains that we are investors in and look at regularly on this channel are going to play a key role in that. And we actually look at the likes of Chainlink and many others that are already making strides towards this. So we will be starting there. We're then going to look at a little bit of the Bitcoin price chart. We're going to be looking at a clip, or a tweet, I should say, from Robert Kiyosaki, the Rich Dad Poor Dad, somebody who I think has published some really great literature on finance and kind of the fake world that we live in as far as banking and everything in between, and the dollar and the fiat systems. The start of his tweet is buy Bitcoin and US dollar. And then he cites the fact that Citibank today is offering bank blockchain technology to turn institutional savings into Citibank tokens, which can be used for instantaneous 24-hour cross-border transactions. He then goes to reiterate again, buy Bitcoin and US dollar. So what is he talking about? We'll then be going over to a clip that highlights just how much of a success and a lifeboat Bitcoin and actually USDT is. And then we're going to be talking about a number of other things. It's quite a lackluster news day, to be honest with you guys. But we do have a lot happening with the markets. A lot of things that make me kind of uneasy at the moment, because the real question for me is what happens with the bond market. You know, you've got this kind of food chain of assets globally, and the bond market is right at the top of that. And you're seeing some really erratic and potentially worrying moves for bonds. You're also seeing that for real estate. They're having a really bad time. Obviously, after the Fed meeting, it might not have seemed like a lot happened, but the big markets got hit hard due to uncertainty with rates, where they're going, and a higher for longer forecast. And of course, the dollar's been doing very well on the back end of that. And you've got to remember right now, as an investor, you do have an alternative, which is leaving your money in cash or stable coins and collecting 5% on it. That's actually a lot more than a lot of the staking rewards for crypto and the yields you can get, and you don't have to endure the volatility. And the same kind of applies for the stock market. So there's this really interesting dynamic going on that we've been really highlighting, and we'll continue to do so. So without further ado, guys, let's get into the video. And I wanted to start things off with going back to this piece that was published by Forbes back in April of this year. And it says approximately $487 trillion of value could be brought onto blockchains. Crypto oracles are the key to bridging the real world with decentralized networks. Now, they mention oracles, and we have been continuing to highlight Chainlink as one of our favorite crypto plays. I was a very early investor in Chainlink over here, and I believe I'm also a very early investor in Chainlink over here. You know, it's very interesting to me that Chainlink stopped capitulating to the downside back in May when even Bitcoin, most of the market continued to sort of fall off of a cliff and go through the downside motions. You know, Chainlink has essentially been consolidating now in a range for 500 days. And is this to do with the kind of staple that Chainlink is actually becoming in facilitating real world value crossing into the blockchain space? You know, in the same way that they were the kind of bridge for real world data into DeFi and blockchains, they're kind of the bridge for real world being able to interoperate with these distributed ledger technology systems. So we continue to highlight Chainlink. This was a very interesting article. I just always wanted to start things off with stuff like this, because there's despite everything going on, inevitability that distributed ledger technology and some of the coins that we highlight are going to be the giants of tomorrow. You know, there really is a revolution going on with blockchain. And it's one of the kind of key points that we continue to reiterate on this channel. So I was going to now dive into the Bitcoin price action and what we're currently seeing and just go over a few things that's making me a little bit uneasy with the larger markets. Bitcoin being very stagnant despite bigger moves taking place elsewhere. Despite that dollar strength as well, you could argue it's kind of showing a bit of strength against. But we'll come back to this when we tie things in. And we'll also be looking at an article that we published today over at Allincrypto.com talking about oil. You know, it's no surprise that the markets have kind of stalled out at a time where fears of inflation have been, you know, coming back with a vengeance. And actually, there's good reason to expect that the likes of oil and inflation could be certainly going into winter with a number of geopolitical things taking quite a interesting turn. But we'll cover that in a second. We'll also talk about bonds, which is something I'm really interested in, and real estate at the moment, because it's very interesting that crypto is not doing a lot whilst these bigger markets are having some interesting moves. And also equities, which we've been very, very right on calling the upside for this year when most missed it, are currently at a interesting point where the question you've got to ask is this just turning into, you know, are we still on the right side of that trend with bigger moves going on? And is the equity market perhaps kidding itself on at this point with a lot of fears overhead? And at what point do people de-risk? We do have higher targets for the equities. We ultimately are bulls on the mid to longer term, you know, into a crash. We think we're in a kind of 2006 going into 2008, and the markets do well up until that point. But, you know, there is going to be data and determining factors that really affect everything. And we try and cover that. And we did look at the week ahead yesterday. But let's start things off with a clip from Robert Kiyosaki, or a tweet, I should say. The tweet reads, bye-bye Bitcoin and the US dollar. Citibank announced today it is offering bank blockchain technology to turn institutional savings into Citibank tokens, which can be used for instantaneous 24/7 cross-border transactions. Bye-bye Bitcoin and US dollar. Very, very interesting that he's saying this. Robert Kiyosaki has been a big advocate for Bitcoin. He's also a big advocate for gold and anti-fiats, if you will. And we should be friends with the gold people because it's a similar thing I think we're trying to do with Bitcoin. But Bitcoin has been nothing short of a success. I mean, it really has, you know, and actually, if you look at Bitcoin against your traditional assets, divided by the money supply, it's one of the few assets that has done exceedingly well. You know, if we go to Bitcoin against the stock market, not the stock market, against the money supply, it's still well up after the kind of March 2020 spill and the printathon, whereas likes of the S&P really hasn't moved and it's just gone sideways. The likes of real estate is actually down. The likes of Tesla and certain tech stocks, of course, are outperformers, those unicorns. But the likes of gold is actually down considering all the printing that they've done. So I think Bitcoin has definitely been a success on that metric. And I also, one thing that people in the West, we're very caught up with our own BS, right? We're very caught up with being in the West. But Bitcoin is global, and Bitcoin has been nothing short of a success. Certainly when you look at your other countries out there that are in turmoil, like Lebanon, like Argentina, like many of the others out there, Bitcoin has really provided a genuine lifeboat, and it is certainly something that is outperforming really across the board, and is doing exactly what it was meant or created to do, depending on what the origins of those creators truly are. So I want to go ahead and play a clip now from CNBC, talking about what's going on with Lebanon, and talking about how Bitcoin is actually providing a lifeboat along with USDT.
After decades of war and bad spending decisions by the government, Lebanon's economy is in ruin. I'm speaking to people who've had their life savings wiped out. There are fuel shortages and power cuts, a local currency that's lost 95% of its value, and crucially, money trapped in the bank. People are literally robbing banks at gunpoint to demand access to their own cash. And because of this, a sort of shadow crypto economy has emerged. So we're talking about locals mining for Bitcoin, Dogecoin, and Litecoin to earn money because they can't find work. Others are getting paid in Bitcoin by finding freelance gigs on Reddit and then treating Bitcoin like their bank because they think it's the safest way to store their savings. I also spoke to multiple people who are arranging meetings in Telegram to swap the stablecoin Tether for actual US dollars, which they then use to buy groceries. Overwhelmingly, what I keep hearing is that people are desperate for a connection to money that actually makes sense, and decentralized digital currencies that are outside the reach of bankers and politicians makes a whole lot more sense than the Lebanese lira right now.
All right, so Mac, let's talk a little bit about some of those crypto mines you mentioned. If there's widespread power cuts and fuel shortages, How does this actually make sense as a way to make money?
So it makes sense because of hydropower. So in certain pockets of the country, like in the Shuf mountain range, which is south of Lebanon, there is abundant and inexpensive electricity being harnessed from the Liktani River. Now, I spoke to Ahmed Abu Dair. He's 22 years old, and he runs an expansive mining network across the country. Now, he has 40 employees working for him. Some of his mining farms are actually running on solar power closer to the Syrian border. And what I find especially compelling about his business model is the fact that he allows people to remotely invest in his operation and then earn a monthly dividend in crypto. And some of his customers are at the opposite end of the country from where these farms are. Some are in Syria, Turkey, and Egypt. It's a really interesting setup.
All right, I know how well-versed you are on crypto. You have a lot of insight on the entire industry, but you're going to have to explain this one. Tether as a form of currency or money. Can you just explain that one? Because we saw some of the issues with it previously.
Right. So in some cases, people are using Tether as a way to get a hold of physical cash. Because remember, even when the Lebanese banks let you withdraw money from your account, there are certain caps on it, and they're taking a huge chunk out of your deposit. So other people are turning to online forums. They're going to Telegram groups to set up a trade. This can be $30 worth of Tether in exchange for physical U.S. dollar bills. Sometimes it's hundreds of thousands of dollars. There are also slightly more formal channels, although all of what we're talking about right now is the black market. But there are these over-the-counter exchange traders who deal specifically in crypto, but they're going to take a cut of the transaction on either end. And then, Frank, there are some merchants who are actually getting into the business of accepting Tether directly. There are restaurants and markets. They just say it's a better way to do business nowadays.
All right, more and more, we're seeing different utilities for cryptocurrencies. Mackenzie Segalos, always great to see you. Always great to have your insight on cryptocurrency, which can be a bit opaque, but you're definitely shining some light on it. Thank you.
Thanks, Frank.
And crypto really does provide a lifeboat. You know, that's absolutely fascinating. And we're seeing more and more of these stories. Bitcoin has been nothing short of a success. We definitely understand the sort of macro turbulence and the food chain of things. Bitcoin and crypto is really the plankton at the bottom, unfortunately, at the moment. And I do think it will start to climb that ladder as its significance becomes more and more. But it's been largely a success by most metrics you can weigh it up by. And ultimately, we do think that's going to continue to be the case. The problem you've got right now is you've got this macro tide. Bitcoin is a weak swimmer in that. You've got this real win that Bitcoin is a paper bag in. And ultimately, those things really need to sort itself out, because I don't think crypto can escape from it, without that turning around. And for me, the real question is, moving away from gold versus the M2, what happens with the bond market? The bond market is quite literally the cornerstone of everything. It is the cornerstone of everything. You know, when money's printed into existence, there's a bond or treasury that's issued on the back end of it. And everyone is stuffed because they're mandated to do within the West and across the world with debt, bonds predominantly. And this market is just not catching a bid at all. And certainly with inflation coming in, it's continuing to sell off due to uncertainty and people not wanting to take that risk. And there's still a lot of people that are bond exposed. And the question is, to whether you have a soft, hard, or no landing, is how does this resolve itself? Does it resolve itself orderly, where the Fed step back in eventually, or the bond market starts to get a bid, and inflation and these sort of things subside, and we start to see that shift back into bonds? That would be your kind of no landing. Do we see that hard landing where bonds capitulate? It causes a lot of pain and huge amounts of bankruptcies, and there's a kind of 2008 style moment, which then forces the government to get back in and ultimately go back to QE. Or, is a soft landing, there's a little bit of turbulence, sort of similar to the no landing. And there's an orderly entering back into the bond market. And the thing is with the bond market, and after Jerome Powell's speech, we didn't get a big move from crypto. We did get a big move from the dollar. It continued to show strength. This is, of course, a monthly chart. Dollar's been having a great couple of months. And we have said, okay, even though we were entering an area where we expect resistance, don't bet against a trend. Don't get in front of a moving trend. The trend is your friend until the end. We're also seeing some real capitulation in the property market, certainly US, from all the sort of ETFs that we look at. So that concerns me. And the fact that crypto, Bitcoin, is doing not really a lot with all this going on, it does make you wonder, doesn't it? It does make you kind of ask yourself the question why. And we know that you've got very record low volatility at the moment. You've got very low interest, very low involvement, whether you want to get that from Google searches, whether you want to get that from on-chain volume, whether you want to get that from exchange volume, it all points to the same thing. And that could be why crypto is not doing a lot. But it will ultimately subdue and succumb to the macro, which right now is putting downward pressure. It's a negative macro, I would say, for risk. And we need to weigh all that up and look for those changes. And that's something that we continue to do on this channel. And we feel like we've got a very good understanding of it. So it's a lot of watching and waiting. You've got PCs coming out on Friday. You've then got non-farm payroll going into next Friday. There's a lot we need to watch, and data is critical for moving forwards and how this space moves. Again, short term, guys, I do apologize for this, but there's not really a lot I can tell you here. You know, this could go up or down in this sort of midpoint of a range. And ultimately, if it goes down, we're looking for maybe a bigger head and shoulders. If it goes up, we know the levels we want to see taken and held to suspect short-term upside. The real question is, can crypto do that at a point when a lot of your bigger markets aren't doing too hot and typically have a correlation with that being quite negative for risk? You know, we're seeing gold sell off. Crypto is being a bit of a pariah, I guess you could say, at the moment. And it's, you know, why I think the lack of interest is probably quite a big factor. So yeah, you also had Michael Saylor buying another, what was it? What did he buy? 5,445 Bitcoin. Good old Michael Saylor. I think Michael Saylor, as much as I hate the cringiness about a lot of what comes out of that whole crew, I think Michael Saylor actually does have quite a good point in regards to a lot of the points that he actually raises in regards to Bitcoin and it being that kind of vessel, certainly against these inflationary fiat systems and a kind of, as Robert Kiyosaki would say, a fake world. So I don't think Robert Kiyosaki is quite on the point here. I think he's also missing the fact that Bitcoin's creation was to avoid these kind of centralized entities, and them offering a service that's kind of new and innovative doesn't quite trump the reasons that Bitcoin was created, and also the global nature of Bitcoin and the reach that it's having. So that's really what we got for you guys. You know, we are a little bit uncertain and uneasy with what we're seeing on the bigger markets. I have to say that and be totally honest. It's just about us watching, waiting, watching levels, seeing where, you know, what Bitcoin does as a result of all this in this kind of macro whirlwind. So we'll keep you up to date every single day on this channel. So make sure you smash that subscribe button. A like and a comment is always appreciated. Do go ahead and check out allincrypto.com. Inflation is certainly becoming a bit of an issue with the likes of oil. This is JP Morgan predicting $150 per barrel. And they cite things like a number of recoveries, what's going on geopolitically, OPEC, and a number of other things. We'll leave a link to this article in the description. On that note, I'm going to love and leave you. Thanks a lot for watching, guys. See you in the next one.